the index inclusion will lead to about 25 to 30 billion of flows, and some market participants were expecting a major rally. We were always of the opinion at UTI that some amount of flows have already come in post the announcement, because the active funds which are tracking the JP Morgan GPI EM index could have purchased many of these securities even before the actual inclusion date. So the outperformance that Indian bonds saw against many of the Asian counterparts were probably a reflection of the strong FPI interest in Indian government bonds. So as we can see from this chart, the announcement of the index inclusion was made in September 2023. So this, if you look at the blue line, which is the FAR foreign ownership, which basically reflects the foreign investor participation in fully accessible root securities. To clarify, not all bonds can be bought by foreign investors in an unlimited manner. There are certain limits that foreign investors have on Indian government bonds. But RBI in 2020 brought out a separate foreign accessible root securities where foreign participants can buy unlimited number of bonds in a way, and so there is no limit on the bonds. And so largely, JP Morgan has included FAR securities and its index. So if you look at the blue line, which shows the ownership of FAR securities, it has been increasing quite aggressively. So from about 2.7%, it's now almost 4.6% of outstanding amount, which is quite significant. If you look at the total foreign ownership of Indian government bonds, that's also increased in September. So if you look at the total expected flows, which were expected to be in the range of 25 to 30 billion, 8 billion have already come. And hence, we expect these flows to remain moderate in the near term. But nevertheless, even a $1.5 billion of flow, which is expected to come, is expected to provide some cushion to bond prices in the months coming ahead.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.